markets went from war panic to potential opportunity. A ceasefire paused escalation, but some talks broke down. Oil and gold started pulling back, and Bitcoin is stabilizing after a volatile week. The real question is risk coming back, or is this just a temporary reset? Find out on this video. Hello everyone, and welcome back to Strategic Markets, your place for fundamental and technical analysis all at once. Now, today in our end of week session, I would have loved to start off the news with something very fun and positive, but sadly, between US and Iran, US Vice President J.D. Vance, he went to Pakistan and had a discussion with Iran today, and the talks were unsuccessful, sadly. So in that particular case, currently no particular treaty has or discussion of agreement has come between US and Iran. And look, we're following the price of oil. Like, these things are happening on the weekend, which is interesting. I don't know what's going to come out before the new week starts. But right now, on the daily, Bitcoin was creating this increasing wedge channel over here. But basically, it broke down from there onwards. We talked about this a couple days back where this was making higher highs, but the RSI was making higher lows. So that was a divergence, and that has actually caused the price to break down a little bit, which has us possibly going in two areas, that either the US and Iran come to a possible solution, or the next thing that we have over here, America starts loading the ships with best ammunitions. That's basically Trump detailing that, look, if talks fail with Iran, the next point is they are going to start looking at loading up ships to begin a harsher attack. I think Trump is wanting to come across with strength. Last time he was literally discussing war crimes against Iran and wanted to take down their power plant structures and whatnot. So, look, I don't know what he has in mind, but I definitely can't with certainty say that we take a peaceful route down from here and the markets just go up. So volatility is still in question. Another interesting aspect is China injected $1.5 trillion in liquidity, 1.5 trillion yuan in liquidity this week, which are generally good for the markets from a perspective of growth, because, whenever China does that, they're generally trying to, increase their economy and manufacturing. But also, you can understand that China currently is struggling with oil. Whatever the case might be, or, it's the Strait of Hormuz allowing certain ships to go through, at the end of the day, China is still struggling to get their oil across as well. So for them to have to print a certain amount of liquidity to stimulate their markets, we'll see how that particularly turns out in the stock market as well. The interesting aspect is, right now, Iran is actually turning to Bitcoin toll, as a matter of fact, for the aspect of allowing any trade to go through the Strait of Hormuz. So I don't know if you guys actually know this, but Iran is actually accepting payments in Bitcoin. They're generally taking about $1 a barrel, which, if a ship is taking about 2 million barrels worth of oil, that's about $2 million that they're taking a toll, and they're taking that in Bitcoin. And I want to, with utmost certainty, say that they believe in Bitcoin, and at the end of the day, that they want to make a stockpile of Bitcoin. But nothing can be certain, because they are also taking stable coins as well, according to different reports. Some people believe this could be the key for Bitcoin going to $100,000 again, and like, at the end of the day, Bitcoin becomes the global reserve currency because more people rely on it. Right now, we can just take this as a signal that yes, they are choosing something other than the US dollar or the yuan, and they're going straight to Bitcoin, and they're happy to do that. And honestly, that's not bad. So we'll keep you posted as to how this story goes, but at least this is a good future discussion for Bitcoin. Where does that take us to the price of Bitcoin? Well, Bitcoin right now is in a very beautiful situation over here. I say that sarcastically. Where we were at a falling wedge pattern over here, we came into this particular area. We are still technically in a falling wedge pattern. Now, you would see that I've drawn this line over here at about 75K. This was the prior resistance that Bitcoin on the daily went to. I'm going to draw this a little bit down at about 74.8, went to on the daily, rejected, and came back down. Now, unless we don't break through our prior local highs and actually take it and then convert it to support, I currently don't have very strong belief that we're actually going to be breaking out of this bearish flag. Like, at the end of the day, 60% of the times a bearish flag does result to downwards action. For me to have a little bit of confidence that yes, we're actually moving to the upside, and I would like it to break through this particular local high over here and actually, stabilize over here before making its move upwards. Until that doesn't happen, I don't have complete certainty in the market that we're just going to move up from over here. And another concern of mine right now for particular downwards action is the fact that we currently have more longs in the market than shorts. And that basically means that more people are bidding for the price of Bitcoin to go up as compared to down. Now, you might think that that's good news, and maybe it does turn out to be, but a lot of the instances where market makers want to make money by washing out traders, they would want to push the price of Bitcoin down, collect the money from the people who get liquidated before choosing the direction of the market and where it goes. And right now, if you see over here, within these yellow line, we have a lot more liquidity at the 65K zone than we have above us. So maybe we squeeze up and go to this particular 74, 75K region. But if we do not have a definitive break up above the 75K zone, I'm still comfortable that we can go down to the 67 zone, because the war talks have not been currently certified or certain that they're going to go well, and we could even vick down to the 6K, with my maximum concern being somewhere around the 63K level. So just keep that in mind, like guys, just because we are trending upwards in the last couple of days has been strong, don't put all your eggs in a basket until we have any definitive areas that show us strength. Another interesting chart to look at right now is from a 6-month downtrend perspective over here. We currently have not broken through this particular downtrend. Now, on the weekly, likely we should break out of it if we stay within this particular area. But if for any reason we've got bad news that comes in on the weekend, Trump says something, yeah, we could easily head down from over here. So that's a bit of a bullish sign. And at the end of the day, we've got this MACD over here that could possibly cross bullish. That could be a good sign too. But until none of that confirms yet, like, this is all hope. There's no certainty just as yet. Ethereum is pointing to a similar picture, but Ethereum, generally speaking, I'm seeing a little bit more strength than Bitcoin. Particularly speaking, we've broken out of this 2,100 zone. We've been tracking this particular resistance line for a while. In the past, it's acted as resistance. Now it's acting as a bit of support, and we bounced very clean off it. And if we actually close above this on a weekly perspective, I'm actually kind of happy that we've crossed out of a bit of a danger zone. But then from there onwards, even on the ETHUSD level, we do have like a relatively 6-month line of downwards action. Until we don't break above that, I'm not really looking for higher highs. I mean, like higher highs or major price action as well. So we had good decision time frames. Next couple of weeks in the market will be fairly dramatic. But yeah, we just kind of have to wait to see some of these drama, because this particular chart is on a linear scale. So you can see the distance, on a logarithmic scale. This is on the linear scale as well. So on the linear scale for both Bitcoin and USD, we are very close to breaking price actions. But on the logarithmic scale, I'm just charting it on this side over here, which is a little bit different. Lastly, we have, which is a very good chart, and I've been tracking this, you would have likely seen other YouTubers chart this too, is the US ISM Purchasing Managers Index. So the ISM is relevant to your manufacturing that's occurring. It's basically an indicator. It's basically an indicator that tracks manufacturing in the US. And basically meaning the blue over here is the increase of the manufacturing index over here. It's going up and it's up, and the green is the price of Bitcoin over here, which we have made it certain that Bitcoin actually moves a little bit or a reasonable bit in correlation with the ISM. So if the ISM very recently, if I were to zoom into this ISM over here right now, you can see even in our March or April reporting, it actually is ranging upwards still pretty strongly. So if that ranges upwards strongly, it is highly likely that the price of Bitcoin could be range upwards as well from here onwards. Just got to wait and see how that correlation goes. And sometimes Bitcoin is a bit more delayed as compared to the ISM. So right now, I'd be really happy to see the Bitcoin possibly having a reversal. At least that is a positive sign. Another positive sign that I look to is towards the Russell 2000. The Russell 2000 is basically a basket of the 1,000 small cap stocks in the US. And because of that, if that is currently ranging upwards and showing a strong trend and moving towards near all-time highs as well, that means small businesses are able to use liquidity to basically have more activity in the markets. And if they can build liquidity and have growth, then that basically gives us hope for our large businesses as well as some risk assets in the market too. But with that being said, I think that's enough analysis from my side. Still fairly cautious, but hopefully optimistic. And all that, I'll pass it over to you.
Well, thank you very much for that, Yash, and terrific job as always, buddy. But yes, we're going on to start off with Brent crude to begin with, because that seems to be the major catalyst that's going on overall with the markets in general, especially considering what's been going on with the talks over in Iran over the weekend, or over in Pakistan, I should say. But in relation to the way everything's been going, even before these talks, you can really see from looking at both of these charts, with the Ichimoku chart on the left-hand side, as well as the moving averages on the right-hand side, we have literally closed well below this 4-hour support resistance line that we've been talking about for the last few videos at the end of the week. Now, considering the fact that we've actually now had these talks literally fail over the weekend, we can pretty much expect overall in terms of Brent crude that we'll most likely be getting back into this range as a trade begins over the next couple of days. That will most likely be the circumstance. The interesting thing overall is that USO, being the United States Oil Fund and the ETF behind that, has remained elevated throughout all of this. So it's been a very interesting disparity that's occurred throughout the whole situation between Brent crude and USO, especially the mere fact that USO has remained elevated whilst Brent crude has been depressed throughout all of that, especially at the end, towards the end of the week. Remembering also that there's been a reasonable amount of options trading which has seemed to have been keeping the strike prices relatively high, looking particularly out towards the May and the June contracts, where you take a look and say, okay, well, a lot of those strike prices that a lot of people have been trading have been, in terms of the May contracts in particular, looking around about the 135 to 150 strike prices, and in June looking around about the 150 strike price in particular. So there's an expectation that the war in itself could be quite prolonged, and it looks as though they were most likely right. So we could be expecting the USO prices overall to probably go upwards again, and alongside that with Brent crude, like we just mentioned a few moments ago. How does that relate to all of the other instruments that Yash was just basically talking about a few moments ago? Well, let's have a look at his favourite, as well as everyone else's as well too, in terms of Bitcoin and Ethereum. Well, when we look at Bitcoin and Ethereum, and I'm going to enlarge this one on the right-hand side in particular, over the last couple of days in particular, we were starting to actually test these prior support and resistance lines overall, and it was actually starting to look reasonably good in relation to what Bitcoin was doing. The lagging indicator was starting to actually come back up and begin to look like it was about to test and potentially even break through some of that price action as well too. So things were starting to look quite positive overall. The actual chart price action itself was coming up to test the prior support resistance line. We were talking about this in particular on Wednesday. You can go back to the actual video back there and have a look at that as well if you like. And that was one of the pivotal areas overall there. When we were taking a look even at the 1-hour charts, and you can have a look there as well too, it was a matter of seeing whether or not it was actually going to break out of that area or break below particular support levels that were there. It broke out, obviously, the top part in terms of breaking through the resistance area in particular to test this support resistance line back here from March 2024. The interesting thing is it tested this area, and this was very, very early in terms of Saturday, and really has just fallen flat on its face ever since, especially since the I suppose the talks over in Pakistan about the Iran war has actually failed. And now we're starting to look back in terms of the testing exactly at that 4-hour support line we were talking about on Wednesday. So these support and resistance lines are really taking effect and really do matter in relation to all of these instruments. When we take a look at Ethereum in particular as well, very, very similar situations are occurring there as well in relation to the prior support resistance lines from back here in May 2022. That area there at 2,340 literally tested it within an inch of its life. You can take a look at the top area up here in terms of this level here at the height. and that high there was actually reaching 2,000. Prime support resistance line was 2,340. Very, very close that it actually got to before it fell on its face as well. The interesting thing overall is it actually did get past that daily, that yearly VWAP, I should say, got past it, was actually trading really, really well above it, and then, unfortunately, failed after those talks about the Iran war had failed as well. So really we're starting to see quite a similar picture going on between Bitcoin and Ethereum, which are the leading coins overall there, and then this will probably also feed into all of the altcoins as well on top of that. Now, the other areas of interest that Yash was just talking about as well, we're taking a look at the indices. Now, the Russell in particular is an interesting one, and we'll go into other factors that will affect that as well. And the interesting thing about the Russell is the fact that halfway through the week, especially after all of the talks about potentially the war being ended in terms of the ceasefire being signed and all of those aspects, is the fact that it literally launched well above all these other areas. We discussed this on Wednesday. Now, the fact that it actually had launched well above these areas had actually shown that it went well above the yearly VWAP. That in itself was basically showing that the buyers were back in control. But it basically most likely would need to actually show that it actually has to come back here, test that area, and then launch itself back up. These kind of tests may actually come into effect over the next few days as there's a little bit more uncertainty coming through. The interesting thing about this is that in terms of the Russell, we're actually seeing this in all of the other major indices as well towards the end of the week. And I'll show you that right now. We're seeing it in the SPY being the top 500 stocks. That reached above the VWAP as well. It also went above all of the other moving averages as well. You can see that even with the white line there too being in the top, being the 100-day moving average. And we're also seeing it in the tech-heavy area as well in terms of the Qs. Same thing, going above the VWAP, going above the 100-day moving average as well. But there is one chart that I really want to show you here in terms of the other major index where this did not happen, and that's the Dow. The Dow itself, the top 30 in terms of the US market, where it actually did not close at the end of the week above the 100-day moving average. And if you take a look at the diamonds being the ETF, it did not close above the VWAP either. So we've got a bit of weakness in terms of relative weakness when it comes to the top 30 stocks in the US market compared to the other indices that are in the US market. Another really, really fascinating thing that I've actually noticed in relation to all of these indexes as well, or sectors I should say, in the market as well, is the software sector, which is showing a very, very major amount of weakness going on as well. And this is what they call the IGV. This is the Expanded Technology Software Sector. Now, what do you think about this one, Yash?
I've never heard of it before. It's the first time for everything.
Okay, well, I'm going to show you the components that make up this sector in a few moments, and I'm sure you would have heard of these components that actually make up this sector. But take a look at this chart, and the chart does not look pretty at all, does it? Now, overall, what's going on here is we've actually had a test of the VWAP, and we've had a test of all of these major moving averages as well. The short-term moving average, the 50-day moving average, and VWAP. And it's failed all of those miserably, especially during this week. We've also had a really, really poor aspect in relation to the lagging index, the lagging indicator on the Ichimoku. Now, hazard a guess. What do you think composes in terms of some of the components in relation to the software sector? Any thoughts?
I would have thought that would be the S&P 500.
There are a lot of them there. Now, I'm going to show you some of these particular companies, and it'll probably make your head spin as to which ones they are. Look at that. Microsoft, Palantir, Oracle, Salesforce, and Palo Alto. These are major, major companies, okay? Those top 5 comprise 35% of this sector. And that is the performance that you're seeing in the overall sector itself. Now, let's take a look at some of those individually, and you're going to see some really poor performance. That's Microsoft.
Wow.
That's Microsoft. And that's the performance it's had since March. Okay? we're looking at some really, really massive stocks here and how poorly they are performing, even whilst the market overall is performing quite well. So we've got a lot of relative weakness going on here. Palantir has been a darling of the actual index for quite a while, and look at that. That's a shocker, okay? And that's actually really respected this 4-hour support resistance line from back in November to the downside really, really poorly. Oracle, an absolute shocker in terms of the recent performance there as well. And really see some massive underperformance going on there with Oracle. Salesforce, have a look at that one. That's an absolute dog in relation to what's been going on with that in recent times. Okay, they're just the top 4. That comprises, we go back to that particular thing there. What's that? 16 and 15. That's 30% of the index. So you can see how poorly performing that particular sector is. So that is what I would like to consider today as the chart of the day. Okay, showing that this is a drag on the market and a really important sector to take a look at, because these are highly technology-based laden aspects there. And if we've got these stocks dragging on the market, you can expect that these will be dragging on the technology sector overall there.
Well, Steve, there is a particular narrative, though, that could be interrupting this particular market, and that's AI.
Absolutely. There's no doubt about that at all, because all of them are involved in AI heavily. There is no doubt about that at all. So there we go. There's a bit of an aside note there for you, but it's a very, very important and interesting one there for sure. Okay, now, well, let's go back into a few other little things as well, which are very, very important too. Let's have a look at the volatility aspect. Now, volatility fell through the floor at the end of this week. Not surprising in terms of how the markets have been going overall. The markets have been going up quite significantly, but I would expect, especially with the way that the peace talks have not gone all that well over the weekend, we will more than likely have a bounce up in volatility off these moving averages. Now, the fact that it's gone below 20, pretty good. In general, that will normally inspire some buying from the institutions and get them back involved overall. Whenever it's below 20, the institutions do get back involved. But whenever it goes back above 20, that's usually when the institutions put on the brakes and say, we're going to pull back on things overall there. And they'll usually go towards more protective measures in terms of buying more puts and all of those kind of things there, in terms of their put options and insurance. DXY, in terms of the dollar, is basically going less into a risk environment, because basically the dollar is now starting to come back down more than anything else after breaking through that support level from back over in December. The bonds is an interesting story. It's going back into more of a risky environment more than anything else in terms of failing that support area and heading back towards their September lows again. Whether that continues to head back towards those September lows or not will be really, really fascinating. Whether or not China and Japan go back into selling mode, we'll wait and see overall there, because the yields themselves are potentially starting to increase again inverse to those bonds, especially as they start testing these short-term support levels again, or short-term moving averages again, I should say. Gold and silver haven't really changed much since we actually spoke on Wednesday. They're pretty much just hovering around this VWAP, trying to decide where to go, whether or not they'll break upwards or downwards or whatever the circumstance is. We're really taking a look to see what goes on in terms of those short-term moving averages more than anything. That's the gold futures, and the silver futures pretty much the same. Interestingly, with silver though, it's actually broken up above this baseline on the Ichimoku curve. Fascinating overall there. So, and we're actually forming a higher high in relation to the lagging indicator. So some more strength is coming into silver, especially as it starts bouncing off that 100-day moving average. So a lot more is going on overall there. Okay, so as you can see, quite a lot going on in terms of the charts and a lot of movement happening overall. And now we've had a spanner thrown in the works, especially now that the peace talks have failed over the weekend. So let's now see how the markets open up, especially here on Monday, because we're the ones who lead the markets, and then it's going to head over to the Asian markets, the European markets, and then into the US markets later on in the day. Things could get a little bit hairy to start off with, just to say things mildly. So it'll be very interesting to see how things do actually open up and then work on it from there. But as you can see, take a look at those levels. We're always saying that. Look at those levels, look at your plan, compare and see how things are going in relation to the way things are working out from there. And then work on things to see whether or not it's actually still in alignment with the plan that you initially worked on from there. Obviously, we can't provide financial advice, but what we can do is we can take a look and see how things are working with the way our plan is going in accordance with those levels. With that, mate, pass it right back to you. You can go for the concluding remarks.
Well, guys, look, I'll definitely say this. This week has been very dramatic. It initially started off with us having a near ceasefire and then again breakdown. Strait of Hormuz did not open up, and therefore, even talks now with JD Vance and Iran has not gone through as well. So, I feel you where we're at right now, and it's going to be very interesting how the markets open up on Monday. But stay relative to your initial idea. With regards to our channel, we have loved the ongoing support and we have loved every single time you've hit that like button. So if you can, please do so today. If you have a comment or anything we can do differently, please feel free to drop it down and we'll take on any feedback or suggestion as well. And if you are loving our journey, please feel free to subscribe as well. This particular video, you will feel that it's a bit edited differently, and we hope that's for the better. But with that being said, we are trying new things as well to become better for you guys and to provide you content easier to consume. So on that topic, thank you for joining us for this week's session, and we will grab you for the next one.
Absolutely. See you soon.